Hello investors, welcome to the channel. For today's video, I'm going to be giving you just a quick update of how the portfolio has been doing. I know some of you out there, your portfolio has been struggling. I know you guys are scared of all the noise you've been hearing. You're hearing about wars, you're hearing about inflation, you're hearing about interest rates. I'm here to tell you that none of that matters when you go ahead, you do your own due diligence, and you have a portfolio that can withstand anything. Now, for those of you that are new here, my name is Tim. I'm that guy that started off this portfolio with just $65. The reason I went ahead and did that is because I wanted to show everyone, especially if you are new to investing, that it does not matter what amount of money you have, you could get started investing today. Now, in order for you to go ahead and get started investing today, it's quite simple. Step one is to go ahead and choose a broker. In order for you to choose a broker, there's so many that you can choose from. If you go ahead and check out the description below, I will leave you the links there for the brokers that I use personally. Step two is to go ahead and deposit that money. Step three is going to be to invest that money. So I went ahead and I started off this investment portfolio with $65, and I made myself a promise to add $250 every single month. Thus far, the portfolio is up to around $785. And then once I got up to that point in time, I went ahead and invested into 10 stocks only after doing my own due diligence. Now, I have been doing this for quite a while, so I'm what's known as a stock picker. I'm able to do research and choose stocks that I think are favorable for me and my portfolio goals. However, if you are new to the stock market, it is highly advisable that you go ahead and get involved with ETFs or exchange traded funds. What these are is that they're pretty much a one stock or exchange traded fund that has a basket of stocks inside of it. What that does is that it spreads the risk around and it reduces the volatility of the stock. If you don't know the words that I'm saying now about reducing risk, volatility, umbrella of stocks, then at this point in time would be a very good time for you to go ahead, like the video, and also subscribe to the channel. So when I went ahead and I added $65 to the portfolio, I chose 10 stocks only. The 10 stocks I chose were these four on top here, which is going to be Amazon, Microsoft, Meta, and Google. The reason I have that in the portfolio is simply as value stocks. Value stocks mean that they're going to keep the portfolio very stable. They're not going to be going up and down very quickly in either direction, and they're going to be bringing some slow growth to the portfolio. The next set of stocks I went ahead and got into was these four down here, and that's going to be Chevron, Realty Income, Altria, and Pepsi Company. The reason I got these four is that I wanted to be paid on a consistent basis. So these four are known as dividend stocks. So the first four is going to give me value. The next four is going to give me a paycheck consistently. And then the last two in the portfolio is going to be Oscar Health right here and New Holdings right here. These two are in the portfolio primarily to give me growth, exponential growth. So now I'm going to give you a walkthrough of how the portfolio is doing since I've opened it up. Now, once again, I'm a stock picker because I've been doing this for quite a while. I pretty much have a good knowledge of how the market operates. So now, as you can see here, this is a straight line. The reason why this is a straight line is because I do have crypto in the portfolio. Now, I'm not very big on crypto, so I never went ahead and bought crypto. I got the crypto when Robinhood had their promotion. Now, on today's with the crypto, you could see it's up right here, but let's go ahead and check out the week. Now, for the week, you could see I'm down 1.81%, which represents $14.45 of monetary value. Now, that is not much. That's just only 1.81%. Let's go ahead and we're going to go over to the 1 month outlook to see how the portfolio is doing. And the portfolio is down 3.69% or around $30. Once again, that is not a lot, and you're going to see why it's not a lot when I go ahead and show you the comparison with the overall market. On the 3-month chart, you can see the portfolio is down 3.38% right here, which represents a nominal value of around $27.52. And lastly, the year to date. This portfolio has been open for only 3 months, so I'm only going to give you the year to date. For the year to date, the portfolio is down 3.45%, which roughly represents a $28 downside. So the portfolio right now, it was not down and it was at break even, it would be $28 plus 785, and that would be exactly what the portfolio value should be with the initial amount of money I started with and the additions that I brought in for the past couple of months that went by. Now, to show you what I mean by the portfolio is not down, I'm going to go ahead now and show you how to compare your personal portfolio with the broad market. Now, most of us go ahead and compare our portfolio with the SPDR ETF or the SPY. The SPY is an ETF, like I mentioned, which is one that you should definitely consider adding to your portfolio. And it has an umbrella of stocks of 500 of America's best companies. So most investors and most traders use this as a benchmark in order to see how their personal portfolio is doing. So on the day, you could see the SPDR ETF is down 1.41%. For the week, it is down 1.86%. For the month, it is down 4.84%. For 3 months, it's down 4.48%. And for the year, it is down 4.73%. So now comparing my portfolio with the SPDR ETF or the broader market portfolio, you could see that the SPDR ETF is down a lot more than my personal portfolio. So like I mentioned earlier, that the amount my portfolio is down is not much. Now, your portfolio should be clearly in line with the SPDR ETF. And if it's not, if your portfolio is going through huge drawbacks, then you need to sit back, reevaluate your portfolio, and then reevaluate your investments. Maybe there's some things you may want to change. Now, let's go ahead now, and I'm going to give you a further walkthrough of the stocks that I think I'm going to have to add more to the portfolio. Now, before I do that, let's go into my buying power right here. The buying power I have right here is around $85. What I like to do every time I go ahead and invest $250 into the portfolio, I like to try my best to keep my buying power here or my liquid capital around 20% of the portfolio. The reason why I do that is that you always need to have some kind of liquid power here in case some kind of opportunity presents itself. Now, I was at a 20% cash reserve right here. However, opportunity did present itself, and I went ahead and deployed some of that money. I deployed some of that money in different of these stocks right here. So what I'm looking at this week. So right here to the right, you can see the percentage that the stocks I have are down. So what I like to do, I do not like to go ahead and touch my reserve capital here unless one of the stocks are down more than 5%. So what I'm eyeing this week, and that's going to depend on how the market opens up on Monday, are the stocks in the portfolio that are down more than 5%. So right here, you can see Amazon is down 6.82%. So I'm going to be going ahead and use some of this money here to add to that. Now, the whole point of me showing you this is that this portfolio does not have thousands of dollars. You do not need thousands of dollars. Just learn to use what you have. And I promise you, if you stay in the market and if you stay consistent, you're going to see positive returns over time. So Amazon is down more than 5%. I'm going to go ahead and deploy some cash into that. Microsoft is down as well, more than 5%. Meta, which is one of my favorite stocks right now, is down almost 10% in the portfolio. Now going down, you see Google is down, but it's not down more than 5%. So it does not hit my criteria. So I'm not going to be diverting any of the cash towards that. And if we go all the way down here, the two growth stocks, which is Oscar Health and New Holdings, they're down significantly. Now, this is the part where most investors, when they realize the investment is down, this is when they become reluctant. They get scared even to go ahead and put more money into the stocks. The reason why that's so is because they did not take time out to go ahead and do research on the company. They did not do their own due diligence. So now that the stock is going down in value, they're questioning themselves, trying to decide if they make the right decision. So, one of the most important things to invest in and staying in the game is that you have to do the initial research, do the initial due diligence. That's what sets this foundation for the rest of your portfolio. So, like I mentioned, because these two growth stocks are down this much, I'm going to be going ahead and deploy some of my liquid capital into those two stocks as well. So there you have it, investors. Just a quick portfolio update to let you guys know, even if your portfolio is down right now, that's still fine. If you are new to investing and you're watching this video today, this is the first video you're seeing, it's still a good time to invest. Despite what is happening out there, despite the wars, despite the interest rates, it's still a good time to start investing. When you go ahead and get started investing, the most important thing is how you invest. So, one of the best investing strategies is to go ahead and dollar cost average, which is what I do with most of the stocks. And you could go ahead and check out my other videos and check out my monthly videos when I go ahead and add the $250 to the portfolio. What dollar cost averaging does, or the DCA method, it allows you to contribute a fixed amount of money on a periodic basis to whatever assets you want, and that's how you grow your position with that assets. Now, once you go ahead and do that, the bonus is that you're going to get what most investors get, which is going to be known as compounding. Once you stay invested and you stay consistent, you're going to see that over time your portfolio is going to be compounding. Compounding means that in addition to the money that you're contributing, the stocks that you're invested in, they're going to be going up in value as well. And if you do have dividend stocks in your portfolio, that dividend stock will be paying you as well. So your portfolio is going to be growing with the money that you're contributing and on its own by the dividends you're receiving and the portfolio growth that you're getting. So, investors, there you go. Keep invested no matter what the market is doing. Do not invest any amount of money that you need right now in the short term. Investing is the long game, and that's where you see the most results. If you have any questions as a new investor or what amount of money you should invest, then let me know in the comments below. Now, if you have not already, now would be a very good opportunity for you to go ahead, like the video, subscribe to the channel to get these videos whenever I post it, so you could see my live updates, full disclosure of what I'm doing with my portfolio, and hopefully this is going to help you out as well. Now, the whole point of me making these videos is that I want to give you as much information as possible in order for you to go ahead and keep pushing your investments.